I think a lot of reports and a lot of publicity over what's happened with the Zain slashing their prices, Safaricom responding, the regulator having expectations on the operators, and today Safaricom indicating that it will be slashing SMS rates. How much upheaval is expected to continue in the Kenyan telecom sector?
Well, so it's an interesting one. I think everybody was caught a bit flat-footed when Zain came into the market with this very, very aggressive tariff reduction of more than 50%. They now charge 3% both on-net and off-net, which is actually, if you look at the interconnect rate of, I think, 2.12 shillings, it really doesn't leave them much left anymore. So as much as everybody expected that they would lower the prices, I don't think everybody had really anticipated that it would be so aggressive. So Safaricom matched them, the other two had to match them as well, and Safaricom now offers these SMS bundles that literally bring them down to the lowest price in the market, but those are on-net rates, so that's within Safaricom's own network. And it's really, you know, it really is a justified question to say how low can you go in this whole battle?
Let's talk about the role of the regulator, because effectively I think they've set the tone. They have expectations as to the market leaders. There is a sense that they operate as an oligopoly, Zain and Safaricom, and that it's really and truly crowded out the market for the smaller operators and any new entrants into the market.
Well, I think that there's several dimensions here. One issue that the regulator had looked at for quite some time was that Safaricom has such a dominant position in the market. They hold around 80% of the market share, or did before Zain came into the market. And that is just, you know, it's just very, very one-sided in the market. But one of the problems here is that when Safaricom when Celtel bought Kcell, they had just lost, I think, market share from 60% down to 40%. So that indicates that Safaricom wasn't always at this very dominant position. And it's very difficult to kind of say, right, on the one hand, we do want competition for consumers because it's better. But on the other hand, you know, do you publish a company that has actually done really well whilst its competitors have sort of gotten lost in, you know, side issues and just not managed their operations as well as they should? So what the regulator has done now is lower the interconnect rate, saying we just need to encourage more off-network traffic. I think the real issue really is that Zain, with their new owners, Bharti, have basically put their own tariffs so low that, you know, with the interconnect rates, there is practically nothing left from that phone call that they make. So they can't really make much money on this.
All right, let's talk about the relationship between Zain and Bharti, because there is a sense that Bharti is going to introduce a new operating model for Zain. They've spoken about rural networks being extended and entering new markets, presumably the rural markets. How's it going to change the landscape and the market share for other players beyond Safaricom?
It's not entirely clear yet if the rural markets are really solely their strategy, at least not in Kenya. Bharti in India have a very different business model of running their networks. They basically don't run a mobile network themselves, but they have outsourced an enormous amount of their business, and that's what their own business model is based on. So one of the critical issues here will be is how far can they actually translate this whole system to sub-Saharan Africa, because a lot of that outsourced industry that they find in India, you don't really find in sub-Saharan Africa, and some of their partners have followed them, but not throughout the entire market and not all of them. And what they seem to have done at the moment is not really focus on rural areas, but just attack the first one in the market very, very, very aggressively. What I think what will happen here is that they will probably pick up a lot of subscribers who are extremely price conscious, but that also means those are not people who spend a lot of money. People with money, you know, they kind of think, right, okay, I've got 2 phone lines already. 1 shilling more or less is really not going to change anything for me, and I'll just stick with whoever, you know, has most of my phone numbers on their phone anyway.
I mean, you talk about outsourcing, and let's discuss how vibrant Kenya is in that respect, because we do know that one of the operators has partnered with a major retailer, for instance, taking them exclusively under their wing to sell their products exclusively to the public. For a company like Safaricom, that had generated a significant proportion of their revenues, that kind of retail system. For those who are middlemen in Kenya, how exciting is this a time for them?
Well, this one of the biggest airtime dealers for Safaricom have actually jumped ship recently and interestingly not gone to Zain/Bharti but have defected to Orange. But one of the really difficult issues for Safaricom's competitors is that Safaricom is just absolutely everywhere. You can get airtime everywhere. You know, it's very easy to find the mobile money agents. That's been a huge bonus for Safaricom. The mobile money service is now starting to make money for them, but it's also an enormous stickiness product because they've rolled that out throughout the entire country, and the other companies look at them and say, you know, we want to do mobile money as well, but they just don't have that enormous agent network throughout the country. So it's that massive footprint that, you know, again, as I said earlier, you know, they've worked really hard to build that, and the others haven't followed suit quite as quickly. So you now have created this network effect that people just basically stay within the Safaricom ecosystem.
Okay, I'm going to bring in our guest host now. His name is Nyagaka Ongeri. I'm going to ghettoize you. You're a Kenyan. May not live in Kenya, but you're one. And when you look at all of this happening, understanding the dynamics of telephony in the country and how communications has become an integral part of people's, how people spend their money in terms of their disposable income and how society has developed, what do you make of what's going on there?
Look, I mean, I think ultimately in Kenya, this is actually good for the consumer. Lower prices is obviously a stimulative effect for the economy in general. I will say for the mobile and for the telephony industry in Kenya, it does present some interesting implications. I think the first thing to consider is, you know, how long can this actually go on? I mean, to the extent that this is a 3 to 6 month phenomena, then you can potentially see the cards actually not being shifted too much. But then the second, and I think the more strategic question for all of the telephony players in Kenya is, what are the revenue sources can you actually put on board to substitute for this loss in voice revenue that you're getting? We know, for instance, that Safaricom has entered into an agreement with Equity Bank to try and increase the number of banking individuals across Kenya. We know data services are actually bringing in a lot of revenue. Andrea mentioned M-Pesa as another potential revenue source. These are key issues, I think, that management is grappling with.
Okay, let's take them to Andrea. Just in terms of the development and the movement into data services and where mobile operators feature, how vibrant is that space?
Well, this is a really interesting development, and I think this is a sort of interesting situation at the moment because Safaricom have actually very, very aggressively invested in data products. I listened to a presentation recently on the services they're rolling out for broadcast houses, you know, where they you know, say we'll offer you data backup services, which companies are now legally obliged to do. Or say, you know, we'll give you open air transmitting facilities, so you don't all have to bring your own van. You don't need satellite transmission facilities. They're rolling out an internet at home product. The only issue here really is timing. That is not yet the bulk of the revenue. So you can see the investments across the board, you know, for corporates, for individuals, but the big bulk of the revenues isn't there yet, whereas they have been attacked in this price war. So it's a question, you know, how long do they want to sit that out? They can't not react because then they lose subscribers. But, you know, they're not really making much money with that at the moment either.
Okay, we've spoken a lot, Andrea, about the consumer and the benefits to the consumer. Let's talk about the shareholder, because anybody who's an investor, either in Zain or Orange or Safaricom, wants to see profitability, wants to see the company doing well. And we know that when these price wars began about a fortnight ago, the Safaricom stocks really took a plunge because investors were really concerned about whether or not Safaricom had a survival strategy post the entry of Zain and Bharti into the market.
I've seen comments from a couple of investment banks who basically said, yes, it will hit their profitability in the short and medium term, but it's not as if, you know, there's sort of any serious concerns about the survival of the company. What is interesting here again is the annual general meeting was attended by, I think, around 1,000 retail shareholders, so people with very, very small shareholdings. And you often find that the questions they ask, people often go to these AGMs for the freebies, for the socializing and everything. So that's not really, it's a sort of side issue, but it's an interesting side issue because people have, the shareholders have been up in arms that there's no free t-shirt, that there's no free lunch. And so Safaricom have told them from last year onwards, said, guys, it makes absolutely no sense for you as shareholders.
Okay, let's talk about consolidation, Nyagaka. In the mobile phone space, the entry of Bharti changes the dynamic. We know that MTN has been looking for new acquisitions in Africa. We're not sure which direction they're going to take, but there is a sense that growth has to come through mergers and acquisitions going forward.
Yeah, and I think this is actually a phenomenon that is dominant to telecom companies globally, which is, how do you actually find this growth? And what are the viable candidates that complement my portfolio of businesses? So this is not purely a Safaricom issue alone. And I'd say that there are two ways I think companies are thinking about it. I think one way is through M&A, as you rightly pointed out. The other way is actually through financial or capital optimization. So should we be paying higher dividends? Should we embark on stock buybacks? And these are problems, again, that are prevalent to all telecom companies.
I mean, Andrea, do you have any comment on this one? Is that going forward, how are mobile phone companies going to make themselves relevant? Yes, it's in the products and the innovation and investment in infrastructure, but what else can they do?
Well, Kenya is always a bit odd because it's such a unique situation with Safaricom holding 80% of the market, and it is a one-country operator. I think if you look at Bharti's business model in India, there's this whole model of do yourself or outsource that I think companies that Zain started experimenting with, but that companies really haven't explored that far. Or sharing infrastructure, moving into data services. What we've also seen in Kenya is a very creative young industry of mobile applications developers and basically people who build services around the mobile industry, payment systems, platforms that can integrate several mobile money providers. And so I think there's a lot of movement in that area as well. And Kenya is certainly I think really a leader in that industry and is also making a lot of global headlines with all that innovation in the online and mobile space.